Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is March 14th, 2024. In this video, I'll take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. I'm going to start on the hourly chart for the euro versus US dollar, just to bring into your attention this blue line right here. This blue line represents the 100-hour moving average. And in trading this week, we've seen on Monday some support buyers against the level, and then on Tuesday we tried to find support against the level, then broke below the level. At late Tuesday and into Wednesday, the price found resistance sellers against the 100-hour moving average, but then broke above it, and then did an okay job of trying to find support against the level and moving up into the close. In trading here today, the price moved back down and dipped a little bit below the level, then tried to hold support against it, and in the last hourly bar off of the US data, the euro versus US dollar moved back below that 100-hour moving average on the higher PPI data. And so if the price can stay below that moving average, it seems to tilt the bias more to the downside for this pair. Of course, we've seen price action above and below that moving average level this week, so there isn't any firm conviction from traders as far as more bullish or more bearish. We are trading nearer high levels, of course, from this move to the upside, but it seems to be flowing with the news or the bias of the day. But we will see. Watch at 100-hour moving average for intraday barometric clues as far as more bullish above, more bearish below. Taking a look at the 4-hour chart, that yellow area that we saw on the hourly chart, that corresponds with this swing area, and this swing area goes back to this this area back here where we had either resistance against the area or support against the area through here, and then fell below it, moved down to this low. We broke above it here, and then fell back below it here, tried to use that level as resistance, and then moved above it, used it as support. Got a little messy through here before finding support against the level again and finding resistance here before moving to the downside. And more recently, the price action has seen more of the sloppiness around that area. I'll give more credit back here, and maybe we're kind of exhausting this area as a support or resistance target. But if we do get below 1.09245, we also have the 50% midpoint of this move down from this high to this low as a level to get to and through. And we held support against it here. We tried to hold support against it here. We did fall below it earlier this week on this break to the downside, but then could not sustain the momentum and then reestablish some support against the level in trading yesterday against that 50% retracement level. So we do need to get below the 50% retracement in order to increase the bearish bias. That would be a barometer that I would look for bullish above. We stay above it on a test, or bearish below on a move below that level. So be aware of that level 2 at 1.09165. Let's take a look at the dollar versus yen next. And I'm going to look at the hourly chart here just to show the price action that we've seen over the last few days here. We did move up on Tuesday, extended up to the 38.2% retracement. I'm going to go back to the high, and this is from this high going back to February, mid-February, down to the low price that we saw in March. A 38.2% retracement held resistance at the 148.157 level, and the market rotated back to the downside. As you can see, we fell below the 100-hour moving average down here, which is flattening out, and then moved back higher. Also in play was the 100-day moving average, and typically that moving average has a little bit more influence, but when it doesn't, and that is when the price starts to move above and below it, it suggests that because of its importance as a day moving average, that if it goes above and below it, the market is saying, I don't know which way we're going to go for this currency pair. And we've had some fundamental news out of Japan that sort of took some of the idea that the Bank of Japan would tighten rates. That led to this rise to the upside. So there is that confusion, but we did hold the 38.2% retracement, trading above and below the 100-day moving average and we're currently above that 100-day moving average, helped by the PPI data and other data coming out of the U.S. trading today. So watch the 100-day moving average. I still have to tilt the bias more to the upside because of being above it, but we do need to get above the 38.2% retracement, and then we'll look toward the 200-hour moving average. That's this green line in this chart as a level to get to and through to increase the bullish bias. Note here that we had this consolidation up here above and below both the sideways moving averages here, but then fell below the levels right through here, came up, retested the 100 before moving to the downside. So that's going to be a key level on the top side too if we can continue the bias up to the upside for this currency pair. Finally, let's take a look at the sterling versus US dollar, and we'll look at the 4-hour chart for this currency pair. And I'll put my customary box around the 125.94 up to 128-ish type area, with this swing area at 127.88 to 128. That's this yellow area right through here. And we saw that in trading yesterday. The trading this week, the price fell back within this red box right here, and then tried to move above it in trading yesterday and sort of failed until. But in trading here today, where the market moved further above that level. But again, that momentum could not be sustained. We are currently trading in the sterling versus US dollar at 127.92, which is below the 128 level, but above the 88 level. We sort of traded that area and traded a lot yesterday as well. And we did hold the 38.2% retracement of the last move to the upside in trading here today at the 127.80. So, 128 has a, temporary lid here, or short-term lid for traders. Stay below that level. The bias remains to the downside. Get below the 38.2% retracement of the last move to the upside at 127.80. And maybe we see more momentum to the downside once, and a retest perhaps of the 50% midpoint of that same level, same move to the upside. The level comes in at 127.46. Earlier this week, the price did hold support near that level. So, we'll watch that level on the downside. If we move back above the 128 level, then look for this high price at 128.27 as the next target. In trading here today, the price high did go up toward that level and found early sellers against it. So it seems to be working. There you go, a quick Kickstart video taking a look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.